Hey, welcome back everyone. It is time for another Money Monday video it's not Monday. It's actually Wednesday, but we're going to post this as a Money Monday trade because I'll tell you what, I've been traveling, got back, found myself a little bit behind, but this is what I would have posted on Monday. It's going to be a beginner's trade. You know, a lot of times I get emails where members say, hey, I'm afraid. I don't want to make a mistake. I want to make sure the stock I pick, the trade I make, the strike price is all perfect. Well, we know that's going to be hard to do. But here's the deal. We can get as close to perfect as we can. Nothing is perfect. Okay, we get that. Well, here's a great beginner's trade. You want to be conservative, right? We want to be conservative. We want to try to make 3%. The stock that we pick, we buy, pays a dividend. In this case, it's 4%. We want to make sure it's a large S&P type company with volume. Volume means our options will have volume or limit orders sitting there to trade our options, okay? Meaning there'll be action when we write a covered call, and if we want to buy the option back, there'll be players there waiting to buy it back from us. So a lot of volume means a lot of action and the ability to manage our trades. If any of that just lost you, email me. It's a part of the golden rules of covered call writing. Now, we want to avoid earnings, and just so happens this stock that I'm about to talk about doesn't have earnings in the time frame I'm going to show you here. We are talking Pfizer. This is a beautiful conservative play. You have to understand Pfizer right now. They have had an absolute explosion because of COVID. We know this. And all of their profits are coming from very successful drugs and boosters and all that stuff. And they're also a very mature business, so at the end of the day, they're selling drugs that keep the lights on. Well, with the vaccines not being as profitable now, notice what happens. We have a 25% slip in literally a month. So Pfizer has fallen off 25%. It's probably trading at about fair value at this point. This is where we want to get involved. If we can get involved in a stock that trades in a range, even though it's trending down, a lot of stocks are trending down. What are we going to do? Sit on our hands and wait for the next great bull rally to happen? We have to use stocks that are probably trending down. But what we want to do is we want to buy those stocks or initiate a cash secure put when the stock is trading in its lower 25 percentile. Okay, we don't want to be up here because the likelihood that the recent run up is getting tired. And of course, Wall Street's going to peel it back. That's what they do. Well, in this case, Pfizer has absolutely peeled back 25%, and we know why, right? We know why. And on top of that, there's news that they're looking to diversify into some big cancer drugs. So that means they're going to have to pony up big bucks, and they're going to do that, I believe. Well, here's the deal. Wall Street isn't quite buying it. So it's sold off more than I actually thought it would. And you could see this is where that news comes out, okay? Pfizer right now is experiencing a little bit of a drag, and you could see by the volume it's more red than green. Hey, Wall Street believes they're probably paying too much for their materials to make all of their pharmaceuticals. And on the other side of it, they're losing some of their huge profit gainers with COVID. And they're coming up against some patent wall where some of their drugs are going to go generic. But all pharmaceuticals have that problem. Wall Street, a lot of times, will deal with that when it happened. Well, in the case of Pfizer, they might be dealing with it now. So here's the question you have to ask yourself. Are we near a bottom? Well, of course, we don't know. Nobody has a crystal ball. But look at this. This, to me, is an opportunity. We literally go back to prices early 2022, and then prior to the boosters, you could see this is where that line was trading, where it was breaking resistance, trying to make new highs, but Wall Street just wasn't buying it. And it would peel off very consistently and trade in this range. We get about right here, and guess what happens? The COVID boosters are coming out. This thing is popping higher because the COVID numbers are still exploding. Well, slowly peeling back. And of course, this is the stock market's peel back, right? Once the market peels back, what did we talk about earlier? They had moved up all the pharmaceuticals. Merck, Bristol Myers, Gilead, all of these started to hit near-term highs. Merck in particular went from 79 to 110. Well, so did Pfizer. Pfizer went to about 55, and then the sell-off starts to happen. Now, this sell-off is kind of in conjunction with a market rally. So they're selling off all of those steady eddies, putting money into the high techs again. Right? Could have got Apple back here at about 129 as Pfizer is falling. Well, Apple is going back to 150, 160. Okay, this is the cycle. Well, here we are with Pfizer. I see Pfizer as really stalling out here. And maybe the sell